Hey guys, welcome back for another episode of the Crypto Forecast. So today I'm going to be having a quick look at the price of Bitcoin as usual. This was a weird flash crash here. We don't really know what happened. There's some speculation that it could have been a mistake by a whale hitting the wrong button in the exchange and selling a large amount of BTC. We don't really know. I think I saw a post on Twitter, but by Bitstamp, that they say that they are investigating this. But anyways, since we don't know what happened here, I'm not gonna speculate about the reasons. I'm just gonna focus on the technical analysis as I usually do in this channel. So I tweeted this out yesterday. I woke up to this actually. I woke up yesterday in the morning and I saw this flash crash and how the dip was bought immediately and we were back up to near 7,400. I said this on the tweet, and just like that, the dip was bought up. Now let's get above that 7.4k resistance and make it support again for extra reassurance. What do you think? Can we do that soon? So basically what I was saying here is that either the price gets above this significant resistance and makes it support again, or if it cannot break above it relatively soon, then it probably will get rejected, because this is a pretty significant level of resistance, as I showed in my previous video. So a few hours later, I shared this on Telegram on my members channel. Here I said, look, this is one scenario is that we get above the 7.4k as soon as possible and consolidate above it. Or scenario 2, if we can't break above it, above 7.4k as soon as possible, we'll probably go revisit the support below and bounce from there. And this is the red arrow here, getting rejected at this significant resistance and going all the way back down here to the black line here, to this support. I'm going to talk about this line a little bit later in the video, even though I talked about this level since the beginning of the year. So scenario 2 ended up happening. We couldn't break above it soon enough, above this resistance, and so the price got rejected and came back down. It didn't get to touch this line and it bounced, and now it's rejecting again from 7.4k. So my assessment now is exactly the same as yesterday for the short term. If we can't, so long as we can't break above 7,400 and actually stay above it, close candles above it, at least a daily candle or a few 4-hour candles, if we can't stay above 7,400, we'll probably reject again and come back down to this black line here. Now let's see the actual chart from right now. These are the daily candles, so we are just below 7,300. So far we are not able to break above 7,400. So unless we get above here and start closing above it, I anticipate we'll come back down to this black line, and maybe in the next, I don't know, couple of daily candles, maybe today or tomorrow, I would actually expect a daily candle to close near this black line here and then consolidate at this line. I would expect a daily candle to close here at the black line. The reason is because this black line is really significant. Guys, I talked about this level. Let's go into the bigger time frame. I talked about this level since February, and by the way, you can watch the videos, guys. I'm not gonna play it here to to just show off or something, but you can go and watch yourself. In February, let's see, the 7th of February, I talked about this already. BTC price forecast and what if the hash war never happened, the 8th of February. So I was already speculating about this on April the 10th. I made another video, crystal ball prediction, just for fun or not. I think I think BTC was at like $4,000 here, and I was already speculating that we would probably, I think we were down here, we would probably blow through the 6,000 resistance level because of my theory about the hash war if the hash war never happened. Having this into account, if the hash war never happened, it means we were consolidating at this level. We would probably be still be consolidating at this level, and this level is my black line. The line that I'm telling you is so significant because it's the level pre-breakdown, pre-hash war. So if my theory is correct, which it's been playing out perfect since then, if my theory is correct, then it means this was the level where demand and supply meets, and it's only logic that we would be going back there and consolidate at this level. So I described this move for a very long time, and because since I started speculating about this, everything has played out exactly as expected. I'm sticking to this theory until or unless I'm proven wrong. Now, I could be proven wrong anytime, right? Let's go back to the daily again. If this black line breaks down with volume and we start closing below it, then okay, my theory might have, maybe I will have to reassess and maybe change my mind, or maybe just take it from there and see what I think is more likely to happen then. But so long as we hold above this super significant black line here, the pre-breakdown line, so long as we stay above this line, my theory is still playing out perfect since February. So I'm gonna stick to it unless this line is broken. Now, if this line is broken, my best guess as of right now is that 6,000 would hold, right? And we would consolidate for longer, above and below, like between 6 and 7,000. That would be my best guess as of right now, but there's no point speculating about this until or unless this black line breaks down. So long as the price stays here, it means my theory is still working out perfect, and the last part of my prediction was after we blow through 6,000 vertical to 9, I think I said 8 or 9,000. You can go watch the video. Then we would crash to this line, which is right now it's at around 6,800, and consolidate here. So I think this is going to be our actual bottom accumulation, like 6,000 used to be before the breakdown. So yeah, basically that's what I'm expecting. I would say one daily candle will close at this line because it makes it more, it's like it reconfirms this line is important and the price is going to close there, one daily candle, and then from there bounce or consolidate. By the time the price gets down here, if it gets down here, probably the 20-day moving average will catch up, and and soon after it will touch the price, and then the price will probably bounce. If it doesn't bounce in the 20-day moving average, then I would expect the 50-day moving average to hold it. By that time, maybe the price is still at this level, but it's already next month or something like that. Now, ideally, to do buy and hold, since the bull market is already confirmed, all the moving averages are in sequence. I explained this in another video as well. You can find it. The title was Early Bull Market Confirmation or something like that. I did recently when we had this cross here. So now all the moving averages are in sequence, and the price is above all of them. So now the bull market is confirmed, and it doesn't matter what happens after. The bull market can reverse into a bear market, of course. But for now, we are in a confirmed bear market. This is a textbook bear market. That's how you define, a bull market. In classic technical analysis, this is what defines a bull market. The 4 moving averages are in sequence, and the price is above all of them. Plus, it's doing higher highs and higher lows. So we are in a bull market. We have been since this cross here. When we are in a bull market, ideally, you want to buy the dips and hold, right? The ideal dip you want to buy is when it touches the 200-day moving average, which is the lowest of the moving averages. So it's going to be the deepest dip. So it's going to be your best opportunity to buy the dip is when the price bounces on the 200-day moving average. Now, as things stand right now, I think by the time the price bounces on the 200-day moving average, I think the price is going to be much, much higher than it is right now, or at least higher, maybe not much, much higher, but I would say it'll be higher. I think for now, especially for those that don't have enough, crypto or Bitcoin. I would be buying the 20 and the 50 day moving averages. If the price gets there, I would be like for sure buying those moving averages, even if it's slower, slow, like dollar cost averaging. You don't have to go all in. But at this stage, I wouldn't wait for the 200 day moving average, because by the time this happens, the price could be at 10,000, 15,000, who knows. For now, we are bullish and we assume continuation until or unless proven wrong. So until or unless we break below this black line here, I'm sticking to my assessment that this line is going to hold and we're going to continue to consolidate here, just like we were consolidating at 6,000 before the breakdown. And we might consolidate here for a while until the price then starts going up again and starts separating from the line again in the future. I don't know when. I'm just gonna have to take it candle by candle. And yeah, if this line breaks down, my best guess is that 6,000 would hold, and I would personally be buying this dip. And if 6,000 breaks, then yes, then we can start to get worried, because then we're breaking serious significant levels. If we break back down below pre-hash war levels, then I'm gonna have to reassess everything. But no point speculating about that. For now, assuming continuation until or unless proven wrong. I'm gonna leave it here. Thank you very much for watching and see you soon. Bye.